In this tutorial, we're going to talk about placing option spread orders, or in this platform, it's referred to as building a strategy. We've created a pre-built page that allows users to easily build option trading strategies, and we call it the DT Strategy Builder. So if you are a client of ours or you're running a demo on this platform with us and you would like to have access to this particular page, send us an email and we'll send you a link to this page so that you can upload it into your system. Of course, you could start from scratch if you wanted to. You could go to add a page, add an empty page. You could name it anything you want. And you can choose Strategy Builder, which is under the trade heading. And from here, you could customize your page, build spreads, do whatever you need to do. That's obviously something that you can do. I would recommend at least starting with our version of the page. That way you've got a template to work with. You can use it out of the box, or if you want to customize it in any way you see fit, obviously you can do that as well. We've created a scenario that we think is going to be the most useful and the most efficient for most of our clients based on their trading needs. This is a spread that we recently recommended to our clients. And I'm using this as an example. I'll show you how to actually build one, but just so you get an idea of what the end goal is. This is what we're shooting for. We build a strategy. We chose custom. If you click on this button, you can see there's several strategies to choose, and I'll go over some of those in a minute, but just pointing this feature out to you that you can build a custom or you can use a pre-built template. Any spread that is built into this platform or any strategy that's built needs to be in the buyer's perspective. This is the correct way to build a spread. This is the way the exchange recognizes the symbols. There are some platforms out there that will allow you to buy or sell any option in any order and put all kinds of uncivilized conglomerates together. But the reality is, if you want quick and efficient execution, it needs to be done the correct way. I'm going to talk a little more about that as we go through this tutorial, but I just want to point that out. This particular spread is what's called a risk reversal. We created a custom because this platform doesn't have a risk reversal built in as a default strategy or as a pre-built strategy. This is something that we do all the time with our clients. I wish that it did have it, but it's not that big of a deal. Again, we're going to do this in more detail later, but just to kind of give you the gist of everything, we enter an O for options. Make sure that's selected. A lot of people will not recognize this column, and they have a futures spread building and they don't realize it. They think they're building an option spread, but it's a future spread. So make sure you have options. And then obviously the leg ratio is pretty standard 1. You can toggle up or down. The symbol is feeder cattle. This is actually the expiration month of the futures contract, which is April. And then the second drop-down box is the expiration of the option itself. If we wanted to see more options available to trade, we would want to change this to May or August, something that has more option expirations. Actually, in fact, I take that back. On feeder cattle, you're probably only, regardless of which contract you choose, probably only going to get 1 or 2 option expirations. So I'll show you on an E-mini S&P trade that has quite a few more expirations for the options. In fact, S&P options expire daily. So if we had more options or more selections for option expiration, we would click on this arrow here and choose it accordingly. And the strike price you can toggle up or down with these buttons, or you can just highlight and type if you prefer to do that. This is to reset the strike price to at the money. So if you wanted to reset what you were doing, you could hit that button. You can increase and decrease the strike, obviously, with these buttons here. Then you can toggle between call and put. So as you can see, you can build just about any spread you want. And if you wanted to add a leg, you would click on the plus button. This would add another row below. If you wanted to take a leg away, you would hit on the minus icon, and that would remove this row for you. You can see once the spread is built, it actually displays an option strategy symbol that you can use to place orders, and I'm going to show you an easy way to do that. You can also see that we have named this tab Feeder Cattle Risk Reversal, because that's exactly what this is. And that way we can easily go back and place trades for other clients, or in your case as a retail trader, if you want to add a lot later on, if you do one today, maybe one tomorrow, or whatever the case is, you can easily go in and add another strategy or another option spread without actually rebuilding it. So you want to keep that tab open as long as you have the position open. And once you go to liquidate your position, you can easily do that with using the same tab. So once you build it, you just keep it. And another thing that people get hung up on a little bit is you actually can't trade the strategy until you save it. Once you build the trade, hit the save button. You can also hit these buttons and hit copy formula. The first time after you save it, it's going to give you an option to add to quotes, which is what I've done here. So I've added this strategy to my quote board. I can see the bid ask on this particular strategy, and I can easily place orders. I can buy it, I can sell it. Within the page that I've built for our clients, DT Strategy Builder, I have a section for a quote board, and you can see I can toggle between futures quotes. This is a good way to follow the markets as I'm placing orders and building spreads. I also have a tab for options, and what I try to habitually do is any option individually or spread that we have recommended to our clients or that we are following, I put it in this options quote list so that I can easily find bids and asks and view our position. You'll notice there are columns buys, sells, open position, and P&L. These columns, if we had a position open in any of these products, this is just a dummy account, by the way, so there's not much going on. But if we did, you would see any of today's buys or sells activity, open positions, and profit and loss here. I'll bring it up an example that does have some positions a little bit later. One thing I wanted to point out is the strategy symbol I have at the top. So this is this strategy here. It's the feeder cattle risk reversal. We actually sold the spread. We hit the sell button, which does the opposite of this, and that's a little confusing. We'll go over that in a minute. But again, that's in the buyer's perspective. That's the correct way to trade the spread. For any given spread, there's only one spread. It's a call spread, it's a put spread, whatever it is, but you can buy it or you can sell it. It's not that there's two different spreads. There's only one spread, and you can take two actions on it. If I did have this feeder cattle spread open, you would not see anything in the strategy row, but you would see the individual options, which I have below. This is the call side of the spread, and this is the put side of the spread. I would recommend anybody that trades these types of strategies do put the individual options in their quote board in addition to the spread symbol. That way, if I wanted to leg out of a spread, let's say, for example, we put on a risk reversal, we sold a cattle call with a strike price of 272, we bought the 247 put, and let's say the market went in our favor. We don't want to offset the entire spread. Maybe we just want to buy back our short call. That's where our risk is, that's where our margin is. So by having these individually in the quote board, I would just click here and then click the buy button. So it's very, very simple as long as you follow a few steps to get everything organized into your quote board. Anything you have in your quote board is going to be tradable within a couple of clicks. Another thing I'd like to point out is the way that we've built this quote board, particularly for the options tab, is we show expiration dates. So you can easily see the expiration date of your options. And if you're unsure of what this mumbo jumbo is, you can find the description column all the way on the right, and it'll tell you in plain English what exactly you are looking at. Lastly, if you do want to pull up a chain and look at not only this option, but surrounding options, there's a button on the far right that opens the options widget, and this will basically open a chain. If I click on it, this is what happens. You can see the entire chain, and obviously it's a little bit small, so I can expand it. Again, as a review, you can use this button to exit full screen or expand the view. As I mentioned, you do not want to overwrite your existing spread strategies that you've already created. You can eventually when you're done with the strategy, but leaving it up and saving it makes it easy to enter and exit positions. So if you wanted to add your position, you could easily do that, or you could liquidate. I'm going to click this plus icon, which is add a new widget. And you can either select trade and find strategy builder, or we could have just typed in strategy builder. And this starts us with a fresh slate. You'll notice that I had my cursor highlighted on the EPH25, that's the E-mini S&P for March of 2025. And because I had that highlighted, when it built a new strategy builder window, use that as the default symbol. So keep in mind, if you do want to make your life just slightly easier, you can select your symbol in advance. If for some reason you do have a symbol selected and you choose Strategy Builder in a new widget and it doesn't fill your symbol the way you wanted it to, it's not the end of the world. You can just type it in and proceed accordingly. The platform is going to default to a futures spread, a user-defined custom spread. However, there is a better way to trade futures spreads in this platform using the futures spread page that we've created. You can see that just click on a symbol, it loads a spread matrix with a chart. So there's a better way to do that, but in theory, you could do it within the Strategy Builder. With that said, that's not what we're doing today. The first thing I'd suggest you do is link your widgets. I link everything together so that as I'm clicking around, everything communicates with each other. That way, if you're trading more than one account and you toggle the account number, everything follows. If you're using a quote board to populate charts or do whatever you need to do, everything follows each other. So if you notice, I have light blue dots highlighted on all of the widgets so that everything communicates with each other. You'll find strategy templates here if you click on this arrow and then choose CME. The first handful are future spreads, so you're going to want to skip over those, at least for what we're doing. And then you're going to see CME option for the remainder of the options. We can do ratio spreads. We can do three-way call spread versus a put. Now, we do this often with our clients. What this is basically a bull call spread with a naked put, or with a naked leg is what we say. Bull call spread with a naked leg. There's a bear put spread with a naked call. We do that often, and that's probably what we're going to build here today. But I just want to show you some of the other things. Now, you'll notice there's a bull call spread and there's a bear put spread, but there is not a bull put spread or a bear call spread, and that's because there really is only one spread. It's a vertical spread, and you can either buy it or sell it, depending on what your strategy is. If you're a premium collector, you would build a bull call spread and sell the spread. If you were a debit trader, you would build a put spread and you would buy it. You can see that I selected bear put spread and it's tabulated everything for me. If I don't like the way that this spread was built for me, I can click customize and I can do what I need to do. I can add legs, so on and so forth. Even if I don't choose customize, I can toggle the strike price up and down. I can type in the strike price. And you'll notice that the value of that option keeps up. If I change the strike price, the quote changes as it should. Even if I'm not customizing, I can change the expiration date. So we already pointed out March 25, this is the futures month. This, the second date or month, is the option expiration month. So if I click on this in the E-mini S&P, there are basically options expiring every day in the E-mini S&P. So you have plenty of things to choose from. Just as a reminder, the actual quarterly option will be EP. It's not going to have 1, 2, 3, or 4 because it's not a weekly option. It's just the quarterly option. Okay, let's build a spread that might be something that we would commonly do in this platform. We're going to do a three-way put spread versus a call. Now, this is a bear put spread with a naked leg, is what we generally call it. And I had the March S&P highlighted, so it toggles to March. It defaults to March. And this is also my expiration, which is the third Friday in March. I'm not sure how it chooses strike prices, but we can revert this to at the money by clicking refresh. Normally what we try to do when we build a three-way spread like this is we want to, basically we're bearish the S&P. We want to play the downside, but we don't want to use our own money. We want to use the market's money. Now, this comes with additional risk because we're selling a naked call option, but the math works out favorably. Options are eroding assets, so if we spend too much money on options over time, we're probably going to have a really hard time making money. So this is a way to use the market's money to speculate in exchange for accepting some risk. Right now, we can see the S&P is at 59.60. We generally wouldn't buy an at-the-money put because they're very expensive. You can see this is about 146 points, 150 points. It's basically $7,500. So that's a lot of money. We might do something like buy a 5,600 put. And as I hit enter, you can see that the price changes accordingly. A 5,600 put is about $60, not $150. So we cut our entry price in half on that particular leg of the spread. And to make it worth our while, we're probably going to have to sell something about 200 to 300 points under the market. So let's try a 5,300 put. And we see that brings in 30 points. Now, ideally, we're going to want to sell something that is roughly about 30 points if we can do so safely, if we can do so by placing our short call option above resistance. So this isn't something where we just force it. If we have to collect less money to get above resistance, so be it. We can't tell the market what the correct price is, the market tells us. While we're building our strategy, we may want to review a chart. If we do, we can right click on the symbol of the E-mini S&P and choose chart. And then we can expand. And you can see the S&P found resistance recently around 6,200. So ideally, we'd want to place our strike price at 6,200 or above. So I'm going to go ahead and exit the full screen there. And we may want to visit an option chain. We can do this by clicking on the symbol, clicking the option chain button here right on the quote board. If you're on the options quote board, the option chain symbol is all the way at the end, just as a warning. If you're on any of the other quote boards, it's going to be towards the middle of the screen. Make sure you're looking at the correct expiration. Again, the S&P has expirations every day, so it gets a little bit hectic. We're going to need to scroll all the way down to find the quarterly expiration, which is right here. And again, it does not have a W1, W3. Those are weekly options. This is the quarterly. So I'm going to choose that expiration. And we need to collect 30 points. So we just pointed out that resistance was around 6,200. We can sell a 6,250 and create a free trade. So that's the one that we're going to want to put into our option spread. I'm going to minimize this, go back to our builder, and we're going to sell the 6,250 call. And then you can see that the prices populate. One thing that I kind of wish this platform had is a netting feature that would show us what the net is, but I think we can all do the math in our head. We can see we're paying 61. See, we're buying this leg, 5,600 put. We're paying $61 for it. And then we're selling these two legs, the 5,300 put, and then also the 6,250 call. So the combined cost is roughly even. Next thing we're going to do is save it. If you click this button here, it creates the strategy. Once that's done, I can now click on this button next to save, and I have additional options. I can just buy or sell the spread straight from here, but what I prefer to do is add the strategy to my options list. So once I click on options, you can see there's a check mark here. Another way you could do it is you can copy the symbol and you could paste it into your symbol finder, but I think that's a little more difficult than it needs to be. So if I choose options, it's going to add it for me. I go to my options tab and it defaults, it goes all the way to the bottom. You can see this is the spread here. The bid ask, I'm going to move it all the way to the top of my page so that I can easily see it. And once I have it in my quote board, I can right click and choose buy or sell. But I think it's a lot easier to simply use these buttons here at the top. If I want to buy this spread, which again, this is in the buyer's perspective. In the buyer's perspective, the leg that you're buying is always listed first, and then additional premium sold is listed second. That's how the exchange rules are written. If you have problems with this, ping me and I'll kind of guide you through the process. But if you generally try to use the pre-built strategies that we have here, you're not going to run into any issues with that. If you try to build custom spreads and you're trying to do sell legs before buy legs, you're probably going to get rejected, and it's going to guide you through the process. The error message will tell you that you can't do that. But once we have the strategy built, saved, put into our quote board, we can easily buy or sell it. To enter the trade, for our strategy, we're going to be a buyer because, again, we want to be long the 5,600 put in the S&P, but we don't want to pay for it. So we sold a put below, we sold a call above. and it ends up being pretty close to free. If I click the buy button, it gives me the order details. We can confirm what we're doing. And in a previous tutorials, I've kind of mentioned how these buttons work, but if you're trading option spreads, you always want to do limit orders. You really never want to hit market. If you hit market, the exchange is probably going to reject it. If it does accept it, you're probably not going to be very happy with the slippage. So don't do that. And just you can use these, the buy bid and the buy offer, which is the bid and the ask, to give you an idea of where the market is. So if I wanted to pay the ask, it would be 280. If I wanted to pay the bid, it would be 215. We can toggle our price up and down here. If the offer is 3, I'd say probably a fair price is going to be somewhere around 275 is what I would do. And then to actually submit the order, click on buy one. Again, this big bar at the bottom is what you're going to want to click if you customize this. If you just want a quick order and you want to buy the ask, you can click that button. If you want to buy the bid, you can click that button. Of course, if you try to buy the bid, you're probably not going to get filled, at least not right away, unless the market moved in your favor. If you want to buy the ask, you're going to probably get filled almost right away. Now, spreads are a little different than buying futures or options outright. The bid and offer is not an exact number. It's more, market makers are quoting it, but a lot of it is synthetic math. So just because you buy the bid doesn't mean you're going to immediately get filled. And if you're trading option spreads, you're probably going to want to give the market a little extra room. So you want to give a few ticks to the market makers, make sure you get filled. If I click this big bar at the bottom, it's going to enter the order at the price that I've selected. And as we can see, the market's moved a little, so I'm going to lower my price. And once I click this, I'm going to have the opportunity to confirm that this is what I'm doing. Now, in the beginning, this is going to seem a little bit Greek because it gives you the symbols here and it's hard to understand what's going on. But just make sure you have a plus sign, 2 minus signs, and you can see the strike symbol. But if you do like what you see, you can click place order. As I mentioned earlier, I prefer to have each individual option in my option quote board as opposed to just the strategy. I think it's easier to follow everything. And again, we can leg out of things if we need to. Unfortunately, I wish there was an easier way to do this, but the easiest way that I found is to click on the information icon next to each leg and just copy and paste the symbol. So I can copy this, paste it into my quote board, and I'll do the same with each leg. Doing so gives me the ability to not only follow the position a little bit easier, but follow each leg. You can see I have the bid ask on each individual leg, and I'm going to move them to the top of the list for easier access. And I can close this window by clicking this arrow here to free up that real estate. Now, some of you may want to actually create tabs in your quote board for each strategy. So for example, instead of seeing the E-mini S&P spread and the cattle spread here on one tab, you may want to have a tab for each, and you can easily do that. Again, this is just a starting point. You can customize the way you want and the way that's going to be easier for you. But with this view, we can see the bid ask on the spread itself and then each individual option. We can also scroll to the right and see the English version of what it is that we're looking at, the expiration dates, open interest, and again, if we want to pull an option chain, we would just click this button here. To reiterate, the exchange wants all option spreads built in the buyer's perspective. This means that if there is a leg in the spread that's being purchased, that should be listed first on line 1. Any sells should be listed subsequently. So when we hit the buy button on this spread, remember I added it to the quote board and I hit buy, it performs each of these line items as displayed: buy, sell, sell. If I hit the sell button, it does the exact opposite. So if I owned this spread, if I bought this spread and entered and I wanted to get out as a spread, meaning executing all 3 legs at the same time, I would hit the sell button while this strategy was selected, and it would do the opposite. It would sell the first leg and buy the other 2 legs to offset the position. Let's take a look at the feeder cattle spread that we previously built. Again, the exchange wants everything in the buyer's perspective. Usually when risk reversals are created, individuals are buying a call option and selling a put. Our intention was to do the opposite because this is a bearish position that we took on in feeder cattle. So to enter our trade, we built the spread as it's designed, but we hit the sell button. And by hitting the sell button, we're doing the opposite of what the strategy calls for. By selling the spread, we are selling the call and buying the put. When we want to exit the spread, we would hit the buy button to buy it back. So we sold the spread to enter, we bought the spread to get out, or we will when we decide to get out. So hitting the buy button does exactly what the spread calls for. Hitting the sell button does the opposite of what the spread calls for. We have the strategy built and into our quote board here. And you can see, as I warned you, you're not going to see any buys, sells, open positions, profit and loss on the strategy itself. But if you enter each individual legs of the spread, you will. You can see the position here, short and long, and from what price. And you can see the P&L. You can also see the stats on the option, the highs, the lows, and scroll over and see the expiration date. If I wanted to exit one of the legs individually, as I have mentioned at least once or twice in the past, I can click on the individual option. If you're not sure what the symbol's telling you, you can scroll over and it's the April 25 call option. If I wanted to buy that option back because we are short, you can see that here, I would highlight this row and hit the buy button, and that's going to enter an order to do so. I haven't mentioned this, but there's a window at the bottom that offers information on account summary, positions, purchase and sales if you've offset any positions today, any orders that you have working, orders that are filled. So you can see all of this information on the same page that you're building your spreads on. Going back to the S&P spread that we built and inserted into our quote board, let's say we wanted to buy this spread. Must have been a pretty good idea because since we built it, and now the price has changed quite a bit. We're just going to go with the flow though. I'm not going to change anything up. This is just for an example. To toggle the price, now keep in mind the price is based on the conglomerate of the spread. So obviously it's netting all three legs of the spread and coming up with this price. The current bid ask we can see right on the order ticket, or we can see it right here in our quote board. I'm going to put this at a price that is not going to get filled. So I'm going to put it at $1 because this is just for example purposes. I want to show you what it looks like once we enter the spread. Not enter it, but enter the trade so you can see it on your working orders tab. So we're going to try to buy this spread for $1. It's actually worth 7 or 8, so it's not going to get filled, and that's exactly what we want to happen. I've entered my parameters. We're going to do one lot. I'm going to hit the buy button. It's going to allow us to confirm. Then we place an order accordingly. Once we place the order, we can go down to the bottom section and find it in our orders tab. You can also look at working orders if you want to filter only the working orders and not the filled, canceled, etc. This orders tab will show all orders regardless of state. And you can also see that there is a filter section here. So if you wanted to only look at S&P orders, you could type in the symbol. If you only wanted to look at crude oil orders, you could do that. Here's our order working, and if we wanted to cancel it, we could click the X button. If we wanted to modify it, meaning change the price, we click on the pencil, and it'll allow us to do that by toggling up or down. A neat feature about this platform is it shows us how far off our order is from the current bid and ask by how many ticks. So for example, if I was going to change our order to 8.5, which is a little more reasonable, it now shows us that the ask is 870 and the bid's 810. I mean, it's moving, but you get the idea. So we're 5 ticks off the bid, 8 ticks off the ask. So that's a pretty cool feature. If we wanted to actually place it, like if we wanted to change the price to whatever we changed the price to in this order ticket, we would click modify. If we change our mind, click don't modify, and it leaves the original order working. Something that I like about this platform is it also shows us the orders that we have working right here next to our buy and sell buttons. So if we click on this drop-down menu, we can also modify the order from here. We can pull up an option chain widget. We can cancel it. We can do all sorts of different things from this little button here. So I'll go ahead and cancel this order. And now we can see it in our orders window as a canceled order. It won't be in working orders because it has been canceled, but it will be in our total orders list. For the sake of time, we're not going to be able to go through each of the various option spread templates, but we can go through a couple of them here. I'm going to build a new tab, and because I had this highlighted, it actually just recreated my S&P spread, and that's fine. So remember, click on this drop-down menu to pull up pre-built strategies and bypass the futures. And then we can go to ratio call spread. And this is probably exactly what you would expect it to look like. I had the S&P highlighted, so it built it based on the S&P. And it's a 1x3 spread. I can toggle up or down. If I wanted to do something other than a 1x3, I could customize it. And I could make it a 1x4, 1x5. I know there's a few of our clients that do those sorts of things, so that is possible. Let's choose March corn and pull up something a little simpler here. Straddle. If you see a situation like this where it has legs grayed out, just click on it and it'll expand that view. I'm not sure why it does that sometimes, but it does. So again, just click on this button to expand it. And because we had corn highlighted, it started us off with a corn strangle. I'm sorry, this is a straddle, meaning we're buying two at-the-money options, a call and a put. If we wanted to collect premium and sell both sides, we would use this spread, save it, and hit the sell button. Let's try crude oil. If I click February crude oil, bear put spread, you'll see it populates everything for me. Again, we can adjust the strike prices up or down. If you want to get a little more complex, maybe we can try, let's do natural gas, and let's try a condor. Condor call, which is a four-legged spread. We can do condor put. So obviously you're going to want to go through and run through each of these and see if there's anything that you're interested in trading. We do some Christmas trees. We call them ladders. But if I click on this, you'll see it builds a ladder for me. And again, don't forget, the first expiration month is relative to the future, and the second one's relative to the option. With a Christmas tree or a call ladder, you're buying one leg and you're selling two options of the same type beyond it. So in this example, this is a call option. We're buying a natural gas 360 call. We're selling a 365 call, and then also selling a 370 call. Probably a pretty dangerous trade, but that's what the default builds. Don't forget to link all of your widgets by clicking this. You can link them to various colors if you have different purposes. It gets kind of complicated, but I like to keep mine simple. So all of mine are blue so they all communicate with each other. That concludes our option spread tutorial. If you have any questions, or if you'd like to have access to the strategy builder page that we've created for our clients, and you are a client of ours, or you are just running a demo and interested in becoming a client, please let me know. I'll send a link to you so you can upload it right into your platform. Just as an FYI, as a reminder to those, if you do upload a link that we send you, click on Add Page via Sharing Link, and then you can paste the link right in here, and it's going to import it into your platform. And it'll stay there. So from here on out, unless you actually delete it or remove it, that page will be there for you to use.